Let's go see what's happening in Nigeria, where the government has introduced the central bank digital currency, but also wants to further expand its boundaries. Citizens took to the streets in recent weeks to protest against the liquidity shortage that occurred throughout the nation, a shortage caused by cash restrictions aimed at pushing the country towards a completely digital economy. However, instead of adopting the digital currency, Nigerian protesters are demanding the exact opposite. They want the restoration of paper coins and banknotes. While the big central bankers are working to introduce CBDCs to citizens, it doesn't seem to be pleasing everyone. When the U.S. Federal Reserve solicited comments on CBDCs, more than two-thirds of commentators were concerned about the risks to financial privacy, endangered financial freedom, and the stability of the banking system, which could become even more precarious. It is not surprising that Nigerians have overwhelmingly opposed the novelty, given that the same things possible with CBDCs can already be done with electronic payments. Less than 0.5% of Nigerians would have used digital currencies, and it may be said that this is due to technological backwardness. Not at all, as the use of cryptocurrencies is thriving. It seems that 50% of Nigerians have used them, a really substantial percentage. The Nigerian government has tried everything to push the use of CBDCs, but to no avail, neither with modest incentives nor with something more substantial. In August 2022, it removed access restrictions so that bank accounts were no longer required to use CBDCs. Then in October, it offered discounts if people used them, for example, to pay for taxes. But Nigerians continue to prefer cash. At this point, the government has gone on the offensive. In December, the Central Bank of Nigeria began limiting cash withdrawals to about $225 per week for individuals and $1,123 for businesses. To make matters worse, the Nigerian government also chose to redesign the currency during this period, in a move aimed at restoring the Central Bank of Nigeria's CBN control over the circulating currency and further deepening the push for a cashless economy. This was stated in a press release from the Central Bank of Nigeria. So not only are citizens limited in the amount they can withdraw, but commercial banks also do not have cash to distribute because many are still waiting for the arrival of the new notes. With these restrictions in place, the Nigerian government has managed to drain the economy of liquidity and lay the groundwork for a forced and authoritarian use of digital currencies. However, even this did not work. Stories of Nigerians struggling with cash restrictions quickly spread on Twitter posts, TikTok videos, and other social media. They took to the streets to protest against the restrictions and the cash shortage. Citizens hope that these new banknotes will arrive soon, but it probably won't be enough. Governor of the central bank, Godwin Emefiele, has stated that his goal is to achieve a 100% cashless economy. In Nigeria, the company that designed the Nigerian CBDC has described cash restrictions as a creative use of marketing and suggested that other countries may adopt similar measures. However, Nigeria could serve as a warning to those countries trying to launch centralized digital currencies. Ayokunle Olubunmi, who is responsible for rating financial institutions at Augusto and Co. in Nigeria, expressed his views on the matter. The central bank doesn't want us to spend money. They want us to transact electronically. But you can't legislate behavioral change like this. Total failure is just around the corner. However, the damage to the economy and people's lives is incalculable, and further drastic measures to impose digital currencies will have truly devastating impacts. People will be faced with an undignified choice between starving and living in isolation or adhering to a cashless economy dictatorship.